Good morning. Welcome back to the Broadcast Retirement Network. This is BRN Weekly for Saturday, March 23rd, 2024. And our top story today, the Fed's messaging on rate cuts buoys a strong stock market. Joining me now to help break things down for the week, Jane King is a journalist joining us from the NASDAQ. Jane, always great to see you. Thanks so much for joining us on the program this morning.
Great to be here, Jeffrey.
Did you have a busy week?
I had a busy week and I'm really excited about March Madness.
Do you have a team?
I'm a Purdue grad. So Purdue is a number one seed. They do not have great success in the tournament. We'll see. Maybe this year will be different. We'll see.
Yeah, and do you? This is kind of a personal question, but do you wager? A lot of people do office polls.
Yeah.
But now here in North Carolina, by the way, and we're going way off topic, but they just opened up sports betting. I
Yeah.
have my concerns about it personally, but do you get involved in all that, or you just like go Purdue like I would be
Well,
go
I
Hofstra?
do have a bracket, but it's just more for fun. I don't have any money on the line. And it's not doing so well, by the way. I'm
Well,
so
I
glad
don't
I don't
know.
have any money on the line.
Yeah, I don't know if it's kind of hard to figure that out. I mean, it comes down to chemistry. All right,
Yeah.
Jane. All right, let's
Okay.
let's put that aside. It was a big week.
Yes.
Everyone looking at the FOMC meeting. Tell us what happened and the reaction of the market.
Well, the headline is, and as we expected, the Federal Reserve did not make any change to interest rates. There was kind of maybe 6 months ago some talk about they might cut interest rates at the March meeting. Well, as these inflation reports started coming out in January and February, it became clear they weren't going to do that. But they left interest rate unchanged. The news-making thing was that they stuck by three interest rate cuts this year.
Okay.
Also talked about how the tight job market isn't really a concern. That's not going to dissuade them from cutting interest rates. Very bullish on the economy. And it really set not just a US, but a global stock market rally.
Yeah, and so we have been talking to you, and we also feature others that come on with you to talk about this. And I think the consensus is there were going to be some rate cuts. We everyone did kind of disagrees on the number. So Jerome Powell stuck the flag for three. Do we have any idea when the first will come? I mean, this is a good thing that it totally buoyed the stock market. It
Oh,
pushed everything up. I mean, they're the stock market collectively is ecstatic.
it is. I mean, we're approaching Dow 40,000. So, I mean, kind of based on that was like the oomph that we needed to like get us. We'd been kind of in a holding pattern a little bit, especially with the NASDAQ, but the Fed meeting really pushed us another leg higher. So I'm hearing now June. But we'll see what happens with the consumer price index and the producer price index when those numbers come out next month.
Yeah, and so there's a whole spate of economic data that we're going to see publicly, but also I'm presuming the Fed gets an extra look. Jane, just in terms of the stock market, we have been talking about artificial intelligence. NVIDIA was the big name. Microsoft is getting involved. Any other key trends that you're seeing? I mean, tech is still big. Everyone's trying to incorporate AI, but any other trends that you are hearing or seeing about during the week?
Well, it feels like the AI play is starting to expand beyond NVIDIA and Microsoft. Like we saw Micron Technologies this week come out with a really great earnings report. They are a chip maker also in the AI space, and they're benefiting from it. So I think we're going to be hearing more companies, not just tech, but other companies talking about how AI is helping them with efficiencies, with targeting customers, collecting data, extracting value from their data. So I think the AI thing is here to stay. I have heard over the past week a couple people talk about energy and how they really think that that is undervalued right now. We've seen oil right around $80 a barrel, and they think energy might be a place to get into. So time will tell. But I have heard that a couple times this week, and energy hasn't really, done anything in a couple of years.
No, it hasn't. And we've been kind of seeing some fluctuation, by the way, in gas prices. Part of that, Jane, is the switch over to the from spring to summer
That's right.
blend. It sounds like a smoothie, but they switch over to a I guess a more efficient blend that has more cost. But here in the Charlotte area, we've seen those gas prices go up now, and they are nationally.
They are going up. I believe they're at a 4 or 5 month high right now. So we're seeing that if the economy is really as strong as it appears to be, at least by the stock market standards, that will create more demand for oil. So we could see prices go up even more.
Yep, absolutely. Well, it's not over yet. More economic data to come. Jane, thanks for popping by. Enjoy the rest of your weekend, and we look forward to having you back very soon.
See you soon.
Thanks, Jane. Always great to see you. Thanks for sharing your perspective. And when we come back, we'll take a look at some of our best segments for the week. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network. Welcome back. It was another great week of great topics and, of course, great contributors. We kicked off the week with some tips to protect veterans against fraud. Let's take a look.
We do know the FTC shared that in 2022 alone, veterans and their family members reported over $262 million worth of fraud. And the reason that that's hard to quantify is that there's a lot of shame and embarrassment that goes with having fallen prey to one of these scammers or fraudsters. And so we have a feeling the number might even be higher, quite a bit higher. So it's one of the reasons we've worked very hard to develop the work that we're doing to make sure that people do feel comfortable reporting so that we can get a better idea of how much this is impacting this community. The biggest one, the one we're trying the hardest to hit right now, is what we call claims predators, or some people call them claim sharks. So these are individuals who are charging veterans and their family members to file their initial claim when really they shouldn't be charged for it. And some of them are charging up to 6 times whatever disability benefit they get granted, which is just disgusting. And so we're working really hard to make sure that our veterans and their family members and survivors know if you're filing a claim with the VA, it should be done for free. And you can either do it yourself on our website, va.gov, or there are accredited representatives out there, so attorneys, claims agents, and veteran service organizations that we help make sure the training is appropriate and accurate, that will help you file your claim for free and make sure that you get access to all of the benefits that you have. So, we're seeing a huge growth in this industry of charging veterans to file their claims, and frankly, it just shouldn't be happening. So that's a big one.
Yeah.
Some of the other ones are the same types of frauds and scams that happen throughout any community, but because veterans have benefits and healthcare, it tends to make them high value targets. So some of them can be, the different types of email, video phishing, spoofing, something called smishing, which is phishing via text message. That's a new one we're seeing happen.
I'd never heard that one
Smishing,
before.
yeah.
Okay, that's new.
Phishing, which is voice phishing on the phone. And it's really just what we see happening is these scamsters and fraudsters really want you to act with urgency. So they make up these scenarios, whether it be, you've been selected for jury duty, your child is in danger, you didn't pay your taxes. If you don't pay us right now, we're going to send you straight to jail. We're going to issue a warrant for your arrest, etc. And it feels really official and really scary. And so, the pressure to act quickly and to act urgency is what most of them rely on.
Right.
Another one that we're seeing have a huge rise is, we call them romance or imposter schemes. So that's where someone's pretending to be either a love interest or a grandchild or a relative of yours that then starts asking for support or money or benefits of some sort. So, fraudsters and scamsters, this is their full-time job, right? So they are spending money, time researching how to best do this. And they understand that, like, generationally, certain generations might be more susceptible to different types of it than others. And so I think, when we look at the retiree community, they tend to prefer, paper. They're not all of them, but some of the community can be a little less comfortable with the technology and stuff. And so, really helping to empower them to know where to go to recognize and where to report when this type of fraud happens, I think is the key. But yeah, I mean, this is their full-time job. They're going to do whatever it takes to separate you from your money. And when it comes to government benefits, especially, they smell the blood in the water, and these sharks are going after it. So,
And we also discussed retirement insecurity. There are growing concerns that Americans don't have enough to save for retirement. Let's take a look.
I think a lot of times when you have conversations with people that maybe haven't been involved in the pension industry, there's an assumption that all plans kind of work the same way, they're designed and funded the same way. And there's been an evolution in plan design. DB is really a framework that allows a lot of customization. So, after the Great Recession, there's a lot of conversations about public plans. It was a very public conversation. And while a lot of that dialogue was DB versus DC, what really happened across the states and local governments was a lot more customization. So it wasn't A or B, it was how do we make this work in a way that suits employees and employers. Yeah, I think the importance of thinking of retirement in terms of income, not wealth. There are some folks who are very wealthy, and that's great. But for most people, this is about having income that can top up their Social Security benefit and keep them at a reasonable standard of living, keep them in their homes so they can afford the necessities in life. And we in our opinion research, we asked individuals, if you had $100,000 nest egg, how much income do you think you could get annually in retirement with that? Retiring at age 67. And we had 29% say respond $20,000 or more, and over 20% also guessing $10,000 or more. Now, if you think about the 4% rule, you can have 4% plus inflation each year thereafter as being a spend down, like where we start this conversation. There's a lot of people that are guessing really high in terms of what their nest egg will provide. So, in my point of view, pensions solved this. Spend down is a very tricky problem for individuals. All these risks are unpooled. Long-term care, how long you live. Pensions solved that. But I also think to the extent that the 401k industry is trying to solve post-retirement, I think that's a positive too.
There's somewhat of a different three-legged stool here. Instead of the one we usually talk about when we're talking about retirement and pensions, I'm thinking the three legs here are kind of the employee or the worker, if you prefer, the employer, and the government. And the government plays a very major role in this, in that, yes, as an employer, you want to do what's right for your business. Good employers also want to do what's right for their employees. But if the government doesn't make it palatable, if it becomes too onerous to offer the benefit the employer would really like to offer, it becomes challenging. So just like Dan, I mean, I've had some discussions, with policymakers and staff, and they are looking for ideas. They do understand that this is a really tough challenge that we have right now because of the point we've gotten to. And they'll ask me questions like, what do we need to do to get more employers to offer pension plans? And I think that's a wonderful question. I think it's really important. But one of the things they can't do, in my opinion, is to change the rules every year or every 2 years or every 3 years, because every time you change the rules, you change the dynamic. And at that point, either you have a CFO pulling their hair out because the finances of it go all over the place, or you have an HR head pulling their hair out because the way they treat their employees is very different and they have to communicate things differently. So, in my view, those three legs of the stool kind of need to get together. And then you need people like Dan and me who are really looking at it as third or fourth parties, but have the best interests of everybody at heart, in my opinion, to let us help to craft those new policies that will really be sustainable for multiple generations to come.
The unemployment rate is very low. The conversation has shifted in our space as well about to focus more on retention than costs. So we see that as being really important. And we actually looked in the state of Alaska, they moved away from offering a pension. And say the same workers working, the same schools, police departments, fire departments, they're seeing different behavior amongst those in the DC plan than the DB plan. So pensions are a good retention tool. That's originally what they were designed to be. And I was asked the other day, well, if workers are going to jump around jobs like they do today, why offer a pension? And, my response was really, we used to incentivize careers and we saw longer careers. And as we moved away from that to more of a cash and carry type of retirement benefit, the incentive to stay on that job and maybe not take another job for a couple percent more has really diminished. So I think, people respond to incentives, and pensions establish this culture where, if I work here, I'm going to be in a good place in retirement.
Certainly in those high physical demand, high risk jobs that you see a lot of in the public sector, but in the private sector as well, in the corporate sector. If you go to a head of HR right now and ask them what their biggest challenge is, every survey that I've seen for a number of years will reflect some combination of attracting employees and the right ones, retaining the right ones, and also workforce management, being able to get the older workers to retire at reasonable ages, but on their own terms. If somebody is 75 years old and they still can't afford to retire, that's a problem for the employee. It's probably also a problem for the employer, because most 75-year-olds that I know are not that level of motivated anymore to do the job that they were motivated to do earlier on. It's not trying to be discriminatory against the older workers. It's trying to provide for them so that they can enjoy retirement. But, not only are HR heads making that their top priority, I've seen surveys over the last 2 or 3 years that those same things, attracting, retaining, and managing the workforce, have become the single top priority for CFOs in a lot of industries, the finance people, and it's because they realize the cost of unwanted turnover and having to use a word that I don't really believe is a word, but having to reskill existing employees so that you can keep your workforce moving it's incredibly high. But going back to the original theme, we really believe, and I think the NERS data proves this to a very large extent, that pensions are in fact a great attraction and retention and workforce management device. But it's not necessarily the pensions of the 1980s. The workforce has evolved. Pensions have evolved with them. We just need to bring the two of them together in a better way. And I think we can do that.
And that wraps up this episode of BRN Weekly. Have a topic of interest, someone you think we should talk to, then drop us a line. And don't forget, for all the latest curated news in lifestyle, wellness, finance, tech, so much more, and all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives, check out our latest content, then visit our website. Hey, we're back again tomorrow with another edition of BRN Sunday. That's right, I'll be joined by the Legal Eagles, David Levine and Kevin Walsh of Groom Law Group, and Oliver Rennick of the Schwab Network will be here in the second segment. Can't get it out to help break down markets and tell us what exactly happened for the week. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes. Now is your opportunity to co-create content around any topic on the First Lifestyle and Wellness Network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.